very warm welcome to what is undeniably one of the most historical moments for us. It's the 10th edition of Evolve. Conceptualized in 2014, Evolve began as a multi-city knowledge series aimed at equipping our MSME partners with the right knowledge and means critical to upscaling their business. It also aimed at giving them a competitive edge when it came to curated banking solutions. Over the last few years, we have successfully reached out to more than 1,200 plus customers across 50 plus cities, and we are delighted to share that our commitment to this segment continues with our 10th edition. The micro and medium enterprises MSME segment has over the last decade or so seen tremendous growth and has cemented its position as a strong contributor towards India's $10 trillion economy. Also sets the context to today's session on MSMEs powering the $10 trillion economy. Our journey over the last few years has been an interesting one and has helped shape our thoughts and blueprints of the MSME segments. Axis Bank's commercial banking group continues to innovate to bring you best-in-class banking services. As we continue to reach out to MSMEs across various cities, we also realize the need to expand our reach beyond just on-ground sessions. With this in mind, we are delighted to share the launch of Digital Evolve, our endeavor to take this knowledge series to a far wider audience. I would like to now invite Mr. Vijay Shetty, President and Head Commercial Banking Group, Axis Bank, to share his views on MSMEs powering the $10 trillion economy. Mr. Vijay Shetty is a seasoned banking professional with 27 plus years of experience in the lending space, focusing on areas such as customer acquisition, corporate and retail, risk management, underwriting, process management, digital transformation, and portfolio management. He has been with Axis Bank since 2016 and has head commercial banking group. His focus is on partnering closely with MSMEs in their growth journey by providing curated solutions. Can we please welcome Mr. Vijay Shetty?
Good evening. Warm welcome to all of you guys. Uh, Today is the 10th edition of Evolve. We started in 2014 thinking that the entire ecosystem of MSMEs are changing. And when you look at the MSME, when you see the number of registration happening in India from 2014 today, it's come up 10x. The reason is government and the banking systems, every ecosystem is working towards that. That's one of the reasons we could able to deliver Indian GDP, MSME is cornerstone, and also MSME is growing from micro, small, as well as medium, every level. In the lending side, when I look at it, it's growing at around 13%, but when I look at the informal sector, which is very, very high, and its growth rate is multiple. Just to give a perspective in terms of why we did Evolve, when we started first year, it's more on interaction and customer interaction. The feedback from the customer, what we got, the learning what they are getting from this Evolve, because our panelists, their insight, their valuable insight is given to the MSME, whether it is micro or small or medium, it's very, very insightful. And also as a bank, when you're getting the feedback from the customer, we may be able to inculcate in our product policy, able to deliver more on the customer. Just to give a glance about Axis Bank, we are the third largest private sector bank. We have almost 1 lakh customer, we have 5,800 plus branches, still expanding across the geography. And we have a balance sheet of almost 16 lakh crores. And we are growing in the MSME almost, in Axis is going at 26% CAGR. We have an ecosystem, our subsidiaries also contributing to the ecosystem, and also we are helping the MSME in the subsidiaries also helping on that. So today's subject is like how to become a 10 trillion economy and when we will reach that. I think if you see the graph, it's talked about 2030. Uh, when Digital India, Make in India, when it started, we wanted to become 5 trillion economy in 2028. I think we are reaching before that. Uh, we have become poised to become a third uh, largest economy in world, and we can become number 2 also when we are grow in the same factor. And it's happening not just like that. I think government, entire banking, financial ecosystem are supporting for that. I know still there are a lot of problems, a lot of gaps in terms of the credit deficit are there. As a bank, we are trying to make sure that entire ecosystem will work from the informal MSME till the large corporate. That's the reason as a bank, we are investing heavily on this segment. Today, we have almost 6.3 MSMEs. In that, Udyam registered is almost 3.7 crore. The government is coming up with UOP, Udyam Assisted Platform. I think that basically informal sector today, they don't register, they don't get a benefit out of it. Digital India, today a vendor in the street, he gets most of the credits through his banking. As a bank or a e-commerce or the MEV machines, whose PhonePe or some of the organization also contributing MSMEs to register in Udyam. Today as Axis Bank, we could able to get the customer consent to a digital journey where they give a consent to register and we go and submit to the government for a Udyam Assisted Platform. And it becomes easier. It's not have a difficulty in terms of registering and application form. Those things are completely eliminated. And also we are trying to get API integration directly with Udyam Assisted Platform. And if you see the Indian economy today, GDP contribution is around 30. When I look at China, it's almost 60. If you want to become a 10 trillion economy, I think we need to move towards that 60% of GDP. Maharashtra is one of the #1 contributor for the state GDP. If you look at 45.3 lakh, and number of MSMEs are almost 25% of India. And Maharashtra, rest of Maharashtra hub is completely one of the world-class MSMEs are there. I think in this room, I think contributing to the Maharashtra GDP is quite large. When you see that industry, then the entire ecosystem comes there. When auto is there today, auto industries are in Pune, the entire ecosystem comes there. We are able to, everybody can grow there. I think in that way, there are large ecosystem also building up now, renewable energy or the defense. These are the sectors are really growing. I was with one of the joint secretary recently. He's talking about Indian unknown company, startup, is supplying defense ecosystem to Israel. Can't believe it, right? So that things are happening. And when I talk about one of the customer of a small business banking, he started the company 5 years back. He got the investment in Shark Tank. So things are changing. Today's self-employed is not taboo. It is like entrepreneurship. Everybody want to become entrepreneurs. As an Axis Bank, we have a portfolio of 2.3 lakh crore. We are growing almost 26%. If you see this graph, small business, which is a micro and small, are growing faster because we could able to underwrite the customer better because of digital imprint. In the same way, the growth is also much faster than the industry. Industry growing at 13%, we are growing at 26%. How are you going and what we are doing as Axis Bank? I think for us, MSME first principle giving us this growth. Today, what we can do to MSMEs, how they can become more efficient, how they can solve the problem in terms of the financial ecosystem. That's what we are trying to do. We are tied up with RBI Innovation Hub, where they give a lot of information, API integration to the banks, all the ecosystem, not only Axis Bank, multiple. We are the first one to integrate with them. We can disperse unsecured business loan within 3 minutes. Uh, Earlier days, if I'm going to a bank asking self-employed, we have to submit tons of document for getting 5 lakh or 10 lakh or 20 lakh loans. Today, we could underwrite based on behavior of the banking, behavior of the GST, we are able to underwrite that customer. That's what they are helping us. Uh, Government is also supporting, right? If you are looking at the schemes they are coming up, CGTMSE scheme, it started with 1 crore, now it is gone up to 10 crores. Startup, now it is 20 crores. Startup can raise the fund through government scheme. They give a guarantee for that. And if you go and DPIIT, if you register that, you get an income tax holiday for 3 years. So I think it's government is doing a lot of stuff. Banks are facilitating that. That's where we can see that reaching that 30 crore. If everybody contributes that, we can do that. But the only thing is today we are growing at 6.5%, and we need to reach 9 to 10%. Then we will reach that 10 crore, 10 lakh, 10 trillion GDP. What we do as a bank today, if somebody want to start up, is there, you want a funding, we can do that. If the promoter want a funding on a sole prop, we can do that. If you want to go global export finance, we have a complete ecosystem. We have a digital Neo for corporate. We can work around, and that will help. Entire ecosystem will work for us. Today, we are the first bank to finance equipment finance. The earlier equipment finance, when I say that somebody want to take a machine of a 50 lakh or at 5 crore, you have to go with a working capital. And here, without a working capital, term loan can be facilitated and we can fund them. We have a 3 vertical. One is the retail banking, the commercial banking group, which takes care of MSME, wholesale banking takes care of mid corporate and large corporate segment. We have every set of segment, customer, we are able to handle that. When I say that, when it is micro and small, they want to do a transaction hassle-free at the branches. When I look at the commercial banking, they want to do a trade, forex, those kind of a transaction, RM-led ecosystem we have created that. And digital ecosystem will help them to do an entire end-to-end transaction. And also, if you look at the subsidiaries what Axis Bank has, today, multiple subsidiaries will also helping the MSMEs, whether it is A-Trades or whether it is Axis Capital, can facilitate if somebody want to go for IPO. In the A-Trades, the new government has come up with up to about 250 crores, you can register there. Your distributor can discount your bill so that your working capital cycle can be reduced. So that will help. It's a complete marketplace. They can go and take a loan from any bank. It's one of the good systems. I think the entire MSME team has to use that. Just to give a perspective, we have launched multiple products. Multiple in the sense, somebody from 50,000 to 100 crores. And this can be done. Like if I give an example, earlier if you want to take a 5 crore, you need to submit the balance sheet and the projection. Today, with the GST and the banking, we can underwrite with those information, we can lend it to you. So another segment the most important because of the informal sector. Informal sector, 10 by 10 shop. If you go to him, he will have 3 types of QR code. One is father, mother, and other details. But his cash flow is there, but he is not showing that in the balance sheet. So whether he need a credit, yes, he need a credit. But what kind of a rate he gets? Like the private lender or the digital startups are giving loans, but high rate of interest. We have come up with a product which rates are competitive and we can do end-to-end transaction. If somebody applies, it's called merchant cash advance. Somebody applies a loan of 5 lakhs. We will do digitally, underwrite, open a current account and disperse the loan in the current account. And he can pay wherever the QR code, whatever the payment is paying, the portion of the amount will deduct it from that customer. So for him, he doesn't have a pinch of EMIs. He knows that I sold 10,000 rupees, I paid 1,000 rupees for the loan. That's it. This is one of the important products which will help the bottom of the pyramid of the MSMEs. Today, I think any MSMEs, we onboard the customer, servicing is very important. As a personal banking, today I don't think we go to the branches. Everything is there in our mobile app. And Axis Bank mobile app is one of the best rated mobile app in the world. So I think new for corporate or new for business, we are trying to bring that like Axis mobile bank, which is done for individuals. Here, like if you have a tally, you can integrate. If you want to make sure that your trade has to be done, bank guarantee has to be done, we can do that. I think these few of the accolades, what we received, testimony for how it is working. Last one, I think few of you are experiencing the Burgundy Private. It's one of the best product Axis Bank is giving it, and for the wealthy and you want to manage your wealth. And this is the one product, we have a stall outside, please experience that. New for corporate, new for banking. If you want to experience that, please go and see that. My request is, if you are really interested to experience that Burgundy Private, please enroll. My request from that. I'm sure we have a prominent panelist today. They are going to give some insight, and also the speakers will talk about what's happening in the world and the trade and forex world, and that may be very useful to you. We want to learn from you when we are there. Please give us a feedback. Feedback is very important for any organization to change ourselves and make sure that we correct ourselves and move to the next level. Thank you very much.
Thank you, Vijay, for your valuable insights. A dynamic market outlook can have a lasting impact on businesses, and we understand that. We also understand how critical it becomes for business owners to stay abreast of how the market is performing, and more importantly, how it can impact them. It is my pleasure to welcome Mr. Brijesh Chalil, EVP and Head, Treasury Market Sales, Axis Bank, to share his views on the current market outlook. Brijesh has extensive experience of well over 2.5 decades in the banking sector. He started his career with ANZ Bank before joining Standard Chartered, where he worked for 20 years as an executive director, financial markets. He joined Axis Bank in 2020 and currently heads a Treasury Market Sales vertical. With over 25 years in Treasury, he has led FX and derivative sales, built the money market desk, and has worked on structured financial solutions. He has a strong network across banks, corporates, and institutions, and is an active participant in the Treasury and markets world. Can we please welcome Mr. Brijesh?
I think that went on for a bit too long. Next time we'll cut it down, Ashwin. Good evening, ladies and gentlemen. It's lovely to be back here in Pune, one of my favorite cities. The city, I think for me, that's a good mix between young and old Pune, young Pune, a lot of education institutes, a lot of manufacturing happening. And I think it balances both tradition and technology fairly well. So welcome to Axis Bank's 10th edition of Evolve. This is one of our knowledge series for MSME. It's where we celebrate MSMEs and we also try to support them. I think most of us would agree that, while India marches on towards this 10 trillion mark, Viksit Bharat as we all call it, this 10 trillion economy is not going to happen only in boardrooms of banks and corporates. It's happening in offices, in Pune, in warehouses, in godowns, in factories, which companies like yourself have set. So first of all, thank you to the MSME sector to kind of push through this 10 trillion economy. And also thank you for allowing Axis Bank to partner with you. You know your business well, and I think today, maybe over the next 20 minutes, what I will try to attempt to do is give you some color on what is happening globally, macro trends, and more importantly, with this tariff war that's on, policies or industrial policy, as we call it in banking terms, is shaping our future, your future, and possibly, this 10 trillion mark, which we are all attempting to move on. So we'll break this into three parts. I've tried to give you a broad perspective. Sounds very boring, industrial policy. Kya hai, shaam ko bula ke, Pune, we are making them listen to some boring policy. But you'll realize that this is strongly going to impact your life and mine. Of course, then there's Viksit Bharat, 10 trillion economy. What do we need to do to get there? And of course, some macroeconomics, which again impact all of us. So we'll start with industrial policy, cornerstone. We've seen the big shock that Donald Trump has given all of us. So on 2nd April, just to put some numbers, and you have to understand each of these numbers impact all of us, $600 billion effectively is what the new tariffs will shave off global GDP. You and me are part of that GDP. That's almost, more than 0.5%, almost 0.6% of global GDP is potentially going to get shaved off. Thankfully, since then, negotiations have happened aggressively and, countries have, kind of come to the table. But the impact is still there. It's still going to be at least $350 billion. And that's almost 0.3% of GDP growth, which is, in some sense, if the world is growing at 2% or 3%, that's 10% of growth shaved off. It will impact India. It will impact, Pune. It will impact you. How does it impact? If you look at the slide on the top right, whenever these tariff announcements happen, the things that get impacted are, for example, investments, consumer spending. Consumption is obviously very big. And then there are things that correct as well. So for example, the whole point of tariffs is trade balances. So you will see trade balances correct. But at what cost? Right? So the sad part here is, whenever these tariff wars happen, investments don't happen in a hurry. So if you are going to do a greenfield or a brownfield project, where you are importing machinery from EU, from Europe or Germany and sending something to America, you're going to put that on hold. And you're not going to put that on hold. Your bankers will put it in cold storage. It goes back 6-8 months. So consumption goes back in a hurry. But when investments slow down, and that's the impact we are already seeing, it is going to slow down our economy. So if you look at the bottom left, this is a little taking us all back in history. There was a senator in 1930, Reed Smoot. So the world was going through a recession, the Great Depression, as they used to call it. So what the senator came up with is this grand plan, which is not very dissimilar from what's happening, is 20,000 products which America was importing. They said, let's put tariffs on all of them. Tariffs went up to almost 40, 50%, 60%. They balanced it out to 20%. World went into a shock. In fact, they did not cause the Great Depression, but the reason the Great Depression prolonged was that Smoot-Halley Act, as we call it. It's considered one of the biggest economic blunders made, right? And in some sense, of course, post that, you had the general agreement of, trade, you had multiple agreements, World Trade Organization come out, all of which was supported and sponsored by America, which basically said, let's not fight. If I make buttons, you make a shirt, let's do whatever we do best. And whoever makes buttons, exports buttons to the rest of the world. Whoever makes shirts, exports that. Everyone, SWOT analysis, do what you can do best. And then, of course, in 2025, we've seen what Trump has done, and you've seen the spike back up. Is all of it wrong? I think, the jury is still out on some of that. Because if you look at the right, you can see what China has actually been doing. So, from 2015, since Trump version 1, Trump has been saying that China has been exporting so much to me. And, we've got to stop it. So, optically, look at that. Chinese exports to US actually from 2015, which was peaked at whatever, 20% can come down to almost 12%. Optically looks very good. But actually, if you look back, and if you look at China's trade surplus, because effectively if you're exporting, then you're generating surpluses, right? has actually shot from 600 billion to 1 trillion. So all they're doing is rerouting through Vietnam, through multiple countries. So in some sense, what is happening is not for no reason. So this brings us to industrial policy. So what was China's policy? I think in 2015, they made this policy made in China, and it was a 10-year plan. And policy is many things. Tariff is just one of them. Some of the things which you all benefit from, PLI, comes from here. Sanctions come from here. Free land, export-import policies, SOPs that you get, everything, especially for the manufacturing sector, which I think this room holds very close, gets impacted here. So just see this, the number of industrial policies, and this is directly going to impact all of you. Just 15 years ago, globally, there were about 35 policies which were of kind of impact that were done. Today, and this is 2022 numbers we have, it's already crossed 1,500 policies. By 24-25, it's going much higher. And each of these policies will impact some sector or the other. The other thing, if you look at what governments are doing as a percentage, maybe 20 years ago, industrial policy, like I said, very boring. Only 8% of government policy was industrial policy. Today, it's almost 38%. 1/3 of all policies that Nirmala Sitharaman or Mr. Modi or whoever announces is around industrial policy, which again impacts everyone in this room. If you look at the bottom slide, and that talks about the share of global manufacturing, you can see that. You could see that maybe 10, 12, 15 years ago, Germany was kind of, all our manufacturing came from there. America as well. Between both of them, they had almost 50% manufacturing. Today, look at it. They have dropped, China's taken over. If you look at the slide on the extreme right, earlier, the large 72% of countries or 78% of countries had almost US as their major trading partner. And it was almost 28% with China. Today, it's completely flipped. And China's not doing this. And why is the world agitating more now? What China was, when China started manufacturing, it was ships. It was, copying CDs and, some small intellectual property theft. And then they would make jerseys or shoes in large numbers. Now it's very different. We're getting into chips. We're getting into EVs. We're getting into batteries. We're getting into, electronics. And then obviously, if there's a Cold War, then there's things of surveillance, over-dependency. I don't know, most of you are aware, China's already got the max, rare elements or rare earths. And they might not share that with the world. What happens then? So the worry is real. Now, we also hear a lot of, clients tell us, oh, what does this mean? Globalization is over. Actually, it's not globalization that's over. So global trade is still on. You can see that the way global trade is moving, it's still skyrocketing. What is changing, you have to understand, is this word called multilateralism, which, by the way, was pioneered by US and sponsored by the US, where the US said we have to have global agencies that monitor trade, and we will all adhere to that. Now, the main sponsor of this multilateralism, which was America, has stepped back. And you and me have no choice. Every country has now got to resolve to the other side, which is bilateral agreements. And again, like I said, for manufacturing, very, very important, because earlier, if exports or imports were impacted by multilateralism, which was, WTO or general rules, now it depends on specific agreements. So you have to keep your eyes and ears open for that. So if you look at the right, that also shows how these regional trade agreements are changing. Earlier, tariffs were very simple, 20% tariff going down to 5% or 5% going to 20%. Now tariffs are very different. The policies talk about technology transfer, the amount of investment you will put, the amount of capital you will invest. It's not straightforward. So you will have to read the fine print. Our worry is that tariffs have happened, and I'll touch upon how RBI has kind of tried to block some of that, but the world is going through some crisis, and we've, like already said, $500 billion possibly disappeared from all our wallets. What's the next wave of attack? So tariffs are on. Countries are negotiating. You can see that in the news every day, or Twitter. The next wave, how do you as a country defend against tariffs? So if America pushes China, for example, what does the other country have in retaliation? So the next wave of retaliation is to weaponize your currency. And once again, if you look at history, what happened, I told you earlier that the tariffs were suddenly put on so many countries, 40, 50, 30%. What did the countries do? They all looked at America and said, if this is it, we don't want to be part of what was called as the gold standard. So all of them just devalued their currencies. Now imagine we're sitting here, you're happily looking at your PAT, 8%, 10%, bankers are saying, aap usko 12% bada do. Suddenly, China realizes they can't do anything, they just devalue their currency 20%. You really think the rupee will stay at 85? What happens if rupee goes to 90 or 95? So, once you weaponize currencies, then there's no end to it, and it's happened in the past. And sadly, or if you look at the graph on the right, history has also proven that all the countries that kind of quickly adhered to that model actually survived and did better. So everyone knows this. This is common knowledge. So the point is, what we have to now watch is if the tariff wars don't escalate, it's good. If they escalate, currencies could be the next weapon. India is not sleeping. I think, we have to be very, very appreciative of what the government is doing. You can just see the number of agreements that India has been signing, and it's going up phenomenally fast. 2010 to 2020 was a bit of a lull. In the last 2, 3, 5 years, the Modi government has actually really taken this up. Recently, we've tied up with Singapore, there's one with UK, there's one with Australia, there's EFTA being signed, of course EU and US are being negotiated. And again, just see the impact for all of us. If you look at the graphs on the right, India exports 440 billion. Today, only about 130 billion, which is 25% of our exports, are governed by trade agreements, which means like a very small percentage of your exports which are managed by agreements which are fairly simple. Now, if you look at the pink part, that's about 200 billion between all of those agreements which will get signed now in the next now to 6 months. And this is in addition to the 129 which will get renegotiated. So 70% of all your exports are going to happen through new agreements, which, like I said, will be deeper, wider, single country to country. So it is going to impact all of us positively, possibly. That's why the government is doing it. So quite appreciative of that, but it's something that we should know. And how does this again impact all of us? PLIs. Till 2020, we didn't even know what was PLI, right? Now there are 14 PLI schemes. Again, if you're a smart manufacturer, this is what you should prick your ears up. 2 lakh crores is kind of the SOPs for you between these 14 PLIs. Please make the most of it. The graph on the middle shows you India's kind of manufacturing as a percentage of the world. So we have not even hit 2% of global manufacturing. We are under 2%. We are talking about 10 trillion economy. We are about 4% of the global GDP. So if you're 4% of global GDP, 18% of global population, your manufacturing is not even 2%. And like I said, this is 2023. I think this graph will only go up. And this is the big boom. This is Viksit Bharat. This is what government of India wants to focus on. And hence, like I said, all of you need to focus on. Services has already shown that. If you look at the extreme right, you can see the gray chart which shows how services has gone from, in 2005, from 2% to 4%. But within that, if you look at the burgundy line, you will see that value-added services, which means tourism is also service, but Pune has so many GCCs, right? You're adding value, higher-end value. That's gone up from 4 to 8%. So more juice, right? So what we have done in services, now I think that has to happen in manufacturing. Some of the, I think very bold policies, I think we must give the government some accolades. The semiconductor, India announced 10 billion, US and EU, of course, about 47, 50 billion, China, of course, at 100 billion. But look at it as a percentage of GDP. 0.3% of GDP has been committed for chips, and India has matched that. Very few countries have reached that. So I think, this is something where we can look into the crystal ball and realize this is where the future is. Electronics, mobiles, we do know. So if you see the graph on the right, you can see that India has become a net exporter of mobiles, mostly because of Apple and the Tata Electronic in Bangalore. But effectively, mobiles, we are net exporters today. Even where net imports, exports are kind of edging out, it's because we are actually importing chips to put it into the mobiles. So once the chip manufacturing kicks off, I think that will again turn positive. So again, more manufacturing, more exports. Moving quickly on to Viksit Bharat, and some of the themes here, and this is some of the challenges that you also need to understand. So, this adage, we need to grow rich before we grow old. We keep looking at where China is. So I've plotted India here at an 8% dollar growth rate, which is basically 7% current growth plus inflation less dollar rupee rate. So it's about 8%, which is fairly conservative. But if we grow at that, in 2050 also you can see the gap between us and China. And while we're talking 10 trillion, people often talk about per capita income. I think that's very important. It's nice to say we're growing, but you want people below the poverty line coming up. India's per capita GDP, by the way, is $2,700. China is about 13,300. We've not put US on the charts. They're about 85,000. So I think that is something that all of you as factory owners, manufacturers should also take care. Okay, we talk about GDP. What is GDP? It's a combination of broadly three things. Labor mostly, capital, when I say capital, it's investments, it's a lot of things, but loosely called capital, and then productivity. So, how smart are you with both of these? So often India has also said that, we have a labor advantage, that we have, demographics, all of that. But if you ask me, that has now, I've got another graph which shows demographics, but your labor advantage is peering off. What you have to do now as manufacturers is move to upskilling your labor. It's not about hiring more people, and I'm sure all of you are facing the same challenge of talent, labor talent, but invest in skilling your labor. That's the future. This is the demographic pyramid. It clearly shows what is a strength will last only 10, 15 years more. So your demographic advantage, youth, 24, आपको काफी लोग मिलेंगे hiring के लिए, very good. But it's not going to last forever, right? So if you look at the graph on the left, which shows how the pyramid, demographic pyramid is moving, and look on the graph on the right, which shows population is degrowing. We all know that. Earlier people used to have 5 kids, then 3, then 2, now 1, now probably 0. So by 2070, we'll be like Japan. Lot of old people, very few people working. We better have our per capita GDP higher than ours. How will you survive? Hence the adage, better grow rich fast before you grow old. There are some hidden demographic dividends. All the ladies in the room, please take knowledge that the women in the workforce has only been going up. It's not only that, the hours that they're spending has also gone up considerably. Of course, fewer babies, more electricity, less, home work, maids coming in to support all of that. So these are some dividends coming our way, which again is points for us to take home. We spoke about CapEx. Again, if you are not investing, India's year-on-year CapEx growth, for all of your perspective, has never even grown about 10%. How will we hit 10 billion or 10 trillion, which we hope to hit? Within this also, if you look at the CapEx breakup, what we've noticed is most of the CapEx is not for plant and machinery. It's actually for real estate and building and all of that. So again, that divergence needs to change. The last two graphs show, if you see the private sector, which is mostly MSME here, has really pushed up the CapEx spending. But this is still 24, 25, you'll see a bit of a slowdown. You can see in governments as well, 25, there is a bit of slowdown. And I'll continue on the slowdown part a bit. One thing on governments that you must know, that there is a shift from center to state. So your SOPs, your PLIs, whatever you're looking, please pay more attention to states than center. The center is, either sweetening or arm twisting states to spend more because they are already maxed out. This is just a breakup of, how the corporate sector is spending the CapEx. Your existing, sectors which are hot, textile, power, real estate, metals. But these 5, in our bank itself, we've got teams running for these sectors now. This is what we think is the future for the next 5-10 years: robotics, renewable energy, defense, electric vehicles, artificial intelligence. And of course, the government is also aligned pretty much. SOPs, PLIs coming into this space. Quickly ending with macroeconomics. This is, a chart on the top left which shows how US growth was. It was going pretty stable. There are two graphs within that, two lines, the dotted and the bold one in burgundy. You can see as soon as the tariff war started, the growth projections for even a country like US has been pulled down, for Europe has been pulled down. If you look at the right, which shows what was Trump's plan. He has this big beautiful bill, which that's what he actually calls it, big beautiful bill. It's in the Senate now, it's getting cleared. It's going to have huge tax stops, consumption spending. But where's the money coming from? He thought it will come from two places, Doge, which was basically government cuts and spending, which Elon Musk was leading, which has now moved sideways because Musk has gone to save back Tesla, I think, from BYD. But you're not even seeing the benefit coming from tariffs. So I think America's fiscal deficit is going to blow out further, which is why the currency has started suddenly correcting. That graph on the bottom is the Dolex chart, which is the dollar index. It had gone as high as 110. The world is worried now because we're saying tariff money is not coming in, shaving of GDP, Dodge not working out. What's going to happen is the Dolex is actually weakening, and we need to you will actually see dollar weaken. EU, not very different, but I think EU, I had said it last time as well, we think is bottomed out. Hopefully, whatever Trump is doing is bringing more of EU closer together. Numbers are still weak, inflation, growth, all of that. China, we mentioned it last time, they're in a sticky place. They were in a sticky place now, they're in a stickier place now. If you just look at the top left, it shows the fiscal deficit. We talk about India's fiscal deficit 4%, China's fiscal deficit is at 10%. They can't spend any more. And sadly, look at the right, their fiscal deficit is not because they're spending more, it's because they're earning less. Their taxes have crapped. So what do you do? And if you see their kind of credit growth that's coming, all of that credit growth seems to be coming from government spending, not private sector. So in a very, very hard place, I would be worried if I were in China. Dollar rupee impacts all of you. We've had an earlier RBI governor. We have a new RBI governor. People say dollar rupee volatility. But two different, RBI heads and slightly different nuances in how, RBI intervention is happening. So if you see the green line, it shows where RBI steps in and effectively sells dollars to cool the market. And the red line is where they come in to buy dollars so that rupee doesn't appreciate too much. So if you see during Mr. Shaktikanta's period, it was slightly narrower, so less volatility in a tighter band. And right now on the right, pre-2025, once Mr. Sanjay Malhotra has come in, you've seen the bands much wider. So I guess if this trend continues, we know what's happening because volatility is here to stay. This chart, what we're trying to quickly try to tell you here is, that chart on the top left is what you really need to see. And on the right, it basically shows credit offtake is coming off. So I don't mean to bust anyone's this thing here, but you have to understand there's global slowdown, India slowdown, and RBI runs a survey. The burgundy is the 3-month survey, the grey is the 6-month advanced survey, which they realized is coming off further. And probably that is why RBI announced a lot of SOPs today, which we think will revive things. Capital flows in India have been muted for various reasons because people have already profited from it. IPOs have happened. US was doing well. We think the money will come back. But India GDP, again, I already showed you how global forecast from US had shaved off GDP. If you look at the bottom right, they've done the same for India. So India GDP forecasts for the forward years, 27, 26, 25, of course, have all been shaved off by half a percent. So India GDP for next year, we were thinking 7, now 6.5. Not bad. And if you look at the last graph on the left, that basically shows the gap between COVID times. So why the government was pushing all of us to try to grow to 7, 8, 9% was that to cover the COVID gap, whatever it is, like a marathon, 4 years, 2 years we never ran. So to play that catch up, 6.5 is not bad. But this is my last slide. What the government has done today, I think, is fantastic. Very bold, not what we had predicted. They cut the repo rate by 50 basis. People were predicting 2 cuts this year, 25 each for the whole year. They upfronted both the cuts. The second thing that they've done is, again, unexpected. They've kept liquidity as it is, a lot of it. They have cut CRR, which is the cash reserve ratio, from 4% to 3%. That's releasing 2.5 lakh crores in the system by September, October to offtake any other liquidity crisis. So a lot of liquidity, lot of support what they've given, and effectively what that means is the real rate should be never below 1%, which is your FD rate minus your inflation. We were as high as 3%, which means more people were happy to save and less investment. So RBI is now disincentivizing you from saving and rather spend your money. And you can see very clearly whenever RBI has done this, the credit impulse responds very fast. Not very fast, but in 6 months. So you will start hopefully seeing a strong capex build up again, which RBI was worried about. So I think that's the note I'm ending on. I'm available after this if you want to chat, but I do hope some of this you found useful and it would help you navigate your journeys further ahead. Thank you for your time.
Thank you, Brijesh, for that very insightful presentation. MSMEs have gradually evolved into becoming the backbone of the Indian economy, contributing not only to GDP, but also to large-scale employment and regional development. As a bank that is deeply committed to supporting the segment, we understand and acknowledge the huge impact the MSME sector is making to the Indian economy, which is also why we are confident that today's session on MSME, powering the $10 trillion economy, will be an extremely insightful one for everyone present here. Today's panel discussion is being helmed by Mr. Prashant TS, President and Head, Mid-Corporate Group, Axis Bank. Prashant heads the mid-corporate and MEG business at Axis Bank, leveraging over 25 years of experience across wholesale and retail banking. He joined Axis Bank in 2020 and has been instrumental in scaling the mid-corporate and medium enterprise portfolio over the last 5 years. He has also led several key transformation projects, driving execution in the wholesale banking coverage group. May I please request Mr. Prashant to come on stage? In conversation with Prashant, we also have our first panelist, Mr. Jitendra Hegde. Mr. Jitendra Hegde, MD of Biorad Medicines Private Limited. He's a visionary leader and a first-generation entrepreneur. Mr. Hegde brings over 2 decades of rich experience in the medical device industry, backed by an engineering foundation and an unshakable belief in India's potential to lead globally in healthcare innovation. As Managing Director of Biorad Medicines, he has not only driven the company's transformation from a national player to a global force across 50+ countries, but also championed the spirit of Make in India through pioneering advancements in orthopedics, urology, and super specialty medical technologies. Under his leadership, Biorad has spearheaded strategic collaborations in Europe and India, acquiring cutting-edge tech in shape memory alloys, coating, balloon catheters, and most recently expanded into the Swiss market with the acquisition of Marflow AG. He also leads a Thayu multi-speciality hospital, reflecting his commitment to accessible healthcare. Let's please welcome Mr. Jitendra Hegde on stage. Now, I would like to introduce you to our next set of panelists, promoters and directors of LK Chemicals Private Limited, Mr. Anna Rao Lokapur and Dr. Ravindra Kulkarni. Mr. Anna Rao Lokapur is a chemical engineer graduate from IIT Mumbai with a master's in chemical engineering from Texas University, USA in 1985. He oversees the administration and financial decisions of the company. Dr. Ravindra Kulkarni completed his graduation from Indian Institute of Science, Bangalore, followed by a PhD from Columbia University, New York. He holds 38 patents, numerous technical publications, and spent 20 years in the US before co-founding LK. He is actively involved in the company's R&D efforts. Put your hands together for Mr. Anna Rao Lokapur and Dr. Ravindra Kulkarni, please. Allow me to introduce our third panelist, Mr. Vikram Puri, Group President and CEO, Posh Metal Industry Private Limited. Mr. Vikram Puri is an innovator and entrepreneur passionate about using technology to build safer, smarter systems. A founding member of one of India's largest infrastructure companies, he played a key role in scaling it from scratch in 1992 to a billion-dollar enterprise. As the founder of Transworld Technologies Limited, he pioneered IoT-based solutions for safety and efficiency. Currently, as president and CEO of the 1,400 crore Posh Group, he leads a diverse conglomerate spanning automotive, infrastructure, manufacturing, and software, with EPPS Infotech gearing up for an IPO. With multiple patents in IoT, AI, and drones, Vikram blends innovation with business acumen. He has served on key industry bodies, including FICCI's National Road Safety Committee and the MCCIA Executive Committee. A dedicated Rotarian and a community leader, he remains committed to using technology for a better future. And in his spare time, he enjoys golf, though more for the challenge than to score. Can we please give him a warm welcome?
Good evening, everyone. Thank you to all the panel members for making it to the panel. Just to share with you all, I think we do this in all the evolves. The intent of this chat is to get some of our clients to share their experiences, and everyone on the dais today have started small and made it big today. And the intent is that they share their experiences, and I've requested them. I had a chat with them earlier. I want you all to keep it straight from the heart, and all the advice that you give, I think every client of ours is going to look forward to it. So let me start with you, Mr. Hegde. Could you just walk us through your journey, since inception? I think, starting the venture small and today having a global footprint. So if you can just give us an introduction, that'll be great.
Yeah. Good evening, everyone. Thanks, Prashant,
Yeah.
calling for the dais and giving this opportunity. So basically, my journey started in manufacturing somewhere in 2010. It was a small company I had acquired in Bangalore. It was just a 1 crore, turnover company on books. So that time, the medical devices basically in India was, made in India was not that, attractive
Yes.
to anyone actually.
Yeah.
So it was selling India-made medical devices was, that also in super specialty was, just impossible, nobody used to entertain us, so we started in 2010 with great courage and definitely with the help of a lot of bankers, the different banks, started with the Vijay bank, our own
Yes.
bank, and then, it was like the Axis came into our support somewhere in 2014, and that was the big courage taken by the Axis because it was in 2014 we were around 20 plus crore turnover, but Axis gave us very good support. So, but about my journey, in 2010 when we started, we first made sure that we should be not only dependent on Indian market, we should target global market as well. So the basic requirement in any manufacturing is the quality and the regulation. So what we made sure that we clear all the regulation as per the international market and make sure that our the quality manufacturing as per the global standard. So, and being in medical, it is very it's paramount.
Yes.
That you clear all the regulatory requirement of different countries. And normally, I'd seen in most of the Indian corporates, they don't focus on, brands actually. So our intention was, we should sell on our own brand, not to become, the contract manufacturers, and make sure that, we compete in all the developed market, not, the third world market.
Sure.
So that is what our primary aim when we started in 2010. So we kept on, investing on the patents, R&D, and kept on doing the research. And yes, it is a hard path actually, but definitely that gave us large benefit, dividend was huge actually in banking terms actually. And after 2016, our graph was really rising, from 1 crore turnover from 2010, now we just closed 550 plus crores actually. So that also with only 2 divisions, but there are so many divisions are coming up. We are now having 100 plus patents. Now, we are having factories across India, in Bangalore, in Pune, and, we are having now land banks in Noida. There we'll be setting up one more factory. And we recently acquired, as you mentioned, in Switzerland, and there is one more in US. So we are, trying to make our footprints from India across the globe. That is what our journey in short.
No, thank you, Mr. Hegde. Truly inspiring. I just want to share with all the audience. I have seen many Indian companies acquiring global companies today. I think I have seen in the mid-market space that today Indian companies are acquiring companies outside. So it's a great thing to see, and we have been part of few financing transactions. So it's really happening like what Brijesh said. India is really going on the global map, and Indian manufacturing companies are also getting there. Thank you.
Thank you.
Mr. Lokapur, I'll come to you. It's a question either of you can choose to answer, Mr. Kulkarni. We are keen to know about the genesis of LK Chemicals and the story till now.
Thank you for giving me the opportunity to talk about LK. The LK journey started sometime in 1986 when I was actually working in San Jose, California, happily working for IBM.
Yeah.
And setup was absolutely fabulous. I was actually involved in the development of the disk drives. And that time, we were talking about 1 gigabyte disk to be manufactured. So it was like an exciting time.
Yeah.
And Raju Lokapur, my partner, happens to be visiting us from India.
Yeah.
He just finished his, he was he's IIT graduate and was finishing his master's in Lubbock, Texas. So I was just asking that there are so many jobs available in San Jose.
Yes.
Which one would you like to pick?
Huh.
He says, I don't want to pick any job. I want to go back to India and start something in India.
Wow.
That was 1986.
Yeah.
And then we started talking to each other, and we felt that this is a good idea if we can start some business in silicons.
Yes.
It's a specialty chemical business.
Yes.
It's an extremely closely held technology.
Yes.
Very few people have it. And we thought that will be the great way to start our business.
Yeah.
And we decided to partner each other.
Sure.
And 1992, I came back to India.
Yeah.
I realized that we really don't have much cash to invest.
Yeah.
But we certainly have basic understanding of the technology.
Yes.
More importantly, we understood how to take a concept and put it in the market.
Yeah.
So the whole process of starting from the conceptualization to the putting together a prototype and getting into market and get profit out of it was really quite a process, and we understood that process.
Yeah.
Started the journey in 1992 with our first sale, where we were making some 10-15 lakh rupees sale. That was hardly anything, and about 50 tons of capacity.
Yeah.
I'm very happy to tell you that as of today, our capacity is 20,000 tons.
Wow.
And we constitute 3% of the global silicon manufacturing.
Yeah.
And we are doing that in Pune. But most important thing, that when we talked about what should be the character and what should be the direction of the company, we felt 3 things. One, in order for us to leverage ourselves, our technology, we must be in the import substitution. The import substitution means that nobody else is making it in India, so we are the first one.
Yeah.
And because you're importing and import substitution, your quality has to be global standard.
Yes.
When you go with the global standard, you first start substituting imports, but very soon you start exporting. So we thought that will automatically give us an edge, that we could also export, not only just import.
Yeah.
Second major thing was that our focus should be on export and import, domestic and export to be balanced.
Yeah.
So I'd love to see 50-50 balance. And I was very happy to say that as of today, 55% of our products are going in export market.
Wonderful.
And third thing was that we really believed that India has a talent, and all this development and global market we are going to take is based on Indian technology and Indian base. So we started putting together from the beginning itself that 25% of our workforce is technical, and they're actually, or not just technical, they're actually the R&D and engineering. The technical part, if you look at it, we have 90% of the people who are actually technical degrees in the company.
Yeah.
But more importantly, the talent is trained to figure out how to take global products and being able to either, innovate the processes which are Indianized. We are in specialty chemical business, and in this business, you can't take technology from outside and put it in India and hope to make money.
Yeah.
It has to be indigenized. And so I'm very happy to say that we have thus far developed more than 30 products which are actually the import substitution and were made in India for the first time.
Wonderful, wonderful.
One more point I want to mention is that sometime in 1994, we stumbled upon to a very, very important issue.
Yeah.
That was that globally everything gets recycled, right? You have steel which get recycled, aluminum get recycled, plastic get recycled.
Yeah.
But realize that the silicon, nobody is recycling silicons.
Yes.
So I made a global trip, and I went to various professors and asked the question, why silicons are not getting recycled? They said, you can't do it. It is economically not viable. And myself and Raju sat down together. In 1995, we decided it can't be done globally, but we can do it in India.
Wow. Wow.
So next 8 years we spent in figuring out how to develop processes which are going to make profitable
Fantastic.
recycling.
Yeah.
And 2003, we put together our first plant. That plant, again, was a very small capacity, 25, 30 tons capacity. Today, we are actually recycling 20,000 tons of global silicon products globally, and it's the largest plant in the world.
Fantastic.
Okay.
Fantastic.
And equally important is that there are only 5 major silicon manufacturers in the world. Okay, the primary manufacturers, and all 5 are our customers now.
Fantastic. Fantastic.
So this is what happened here is that the utter belief that we have a fantastic technical talent in India, together with a vision that we should use this technical talent to import substitute, get foreign exchange, and be the global player.
Fantastic.
Last point I want to mention is that as of today, we are exporting to 42 different countries globally, and are very happy to be associated with being part of India and part of Pune.
Absolutely.
And can't feel more proud than what we are. That being sitting in India rather than sitting in IBM in San Jose, I'm sitting in Pune, and being able to smile and talk about what has happened in LK.
Absolutely, sir. I think me and everyone in the room is proud. I think, it's a great point. See what imports are happening and can it be produced in India? And I think that's a great thought. And we are talking about brain drain now where people want to go outside. And I think it's a great example of, the talent of India was settled outside, coming back to India and making us proud. So, Mr. Lokapur, let me, keep this question a little out of this thing. I think like all other bankers, I was trying to sell you, we have a Burgundy Private, and Mr. Kulkarni said he manages his own portfolio for the last 30 years, his equity portfolio. So why don't you just tell us the secret? I want to keep this question a little out of topic.
Yes, thank you very much for giving me the opportunity to be here. I think Ravi has already spoken about our journey through the last 35 years. Just to add a few things, and then of course I'll come to the investment part also. We are one of the largest manufacturers of silicons and largest recyclers of silicon. After taking over a company originating from China that we took over. We are a Star 3 export house for the last several years. We import almost 100 containers a month, export about 35 to 40.
Wow.
And our exports are basically North America, Indian subcontinent, CIS countries, Africa, Europe, all over the world. And LK is a brand name to reckon with. You know, I look after mainly the commercial aspects of business. And focus is obviously on quality and delivery. Because, and flawless delivery. Because in export market, you can't afford to be shabby. In the sense that with respect to your product quality, of course, packing, packaging, documentation, everything has to be flawless.
Sure.
And everybody wants the products as of yesterday evening. And you know, it's something that we have been able to manage, particularly with 30 different products that we have. And several of them have been tweaked to suit the Indian customer requirements. And we are servicing, and we are either number one or number two in various segments of industries, such as pharma, prophylactics, textiles, construction, personal care, agri-adjuvant, and so on and so forth. And with the next generation joining in, we are also getting into paints and coatings and some of the resin products, which are very much in the vogue right now. To come back to the question of, you know, equity investments.
Yes.
You know, I met some of your other people, you yourself. Axis Bank has been very good. And I think Indian markets have been exceptionally kind and good, because I've grown up in the family where my father was also in the stockbroking business. Very conservative, keep your feet on the ground and don't get exuberant, you know, in the sense that when the market rises, it's okay. My calculation is very simple. You know, Indian GDP is growing at whatever, 6.57%. Inflation is about 6%. So if you're growing at, say, 13%, it's a no-brainer. Anybody, you know, you pick the stocks and it will rise by 13, 14%. Add another 1.5% of dividend yields, which is never counted in any of your indices or whatever. And then if you consider yourselves very clever, you have to add another 3 to 4% to it, right? So that makes it almost 18. By rule of 72, if you are doubling your money in every 4 years, I think that's a given thing. And the good part is, you know, I have lived through the times of 1970s when the income tax rates had peaked at 95%. Then there was wealth tax and compulsory deposit scheme. I don't know how many of you were there in 1981-82 when there was a tax if you have a wealth of more than 17.5 lakh rupees. And those were the very tough times. And then you had dream budget of, you know, I don't know whether to name Mr. Chidambaram because he's out of power, but there was no tax on dividend. There was no tax of long-term capital gain. There was LRS came about. So
I think we've reversed all that. We're going to tax every possible income that you make today.
But I think it is still very, very reasonable, I would say. Because, you know, we pay 22% plus whatever auxiliary taxes and CRS and all that, but still it comes to still less than 25%. You know, when the Americans have to pay 38%, Europeans have to pay maybe low 40%, 25, 26% is not too bad.
Wow,
I think
that's good.
Very fair.
Of course.
And I never complained, you know, after paying 95% of the income as taxes in 1979-80, assessment year. And the wealth tax used to be there, which was very punitive. State duty has pretty much vanished, so that you know, there is an incentive from the government to become more and more honest, which was earlier almost impossible. And of course, the GST has made the life a lot more easy and comfortable. Because earlier, you had to always find out whether, you know, the truck is crossing the octroi limit or not, whether your godown is whatever. A lot of time, energy, efforts, and basically your thinking was blocked into some negative things and how to get out of it. Today the things are a lot simpler. You know, just to tell you a thing, you know, in the earlier days we had taken lots of term loans. And in 1996 the term loan rates were 21%. Is it something that is even unimaginable as of today? And With borrowing at 21%, how are you going to make money?
Sure.
Unless your EBITDAs were like
Yeah.
mid-30s or something. It was impossible.
Yeah.
Luckily, today the cost of capital is much more reasonable.
Yeah.
The cost of transportation and whatever e-way bill and all
Yeah.
that have truly eased the problems.
True. Yeah.
Just to tell you one little aberration, this is pertaining to customs duty. When we started the business in 1991-92, the import duty on silicon was 314.5%. Today that number is 8%.
Yeah.
And if you are smiling and sitting here, because we always believed that our competition is always with China and with nobody else. With quality, you have to match the Germans.
Sure.
With service and customer service, you have to match the Americans.
Yeah.
Always
True.
sweet talkers, with or without Trump. And for cost, you have to compete with the Chinese. And if you can master that formula, then I think any person with 100 IQ can sell you a product.
Yeah.
That's the kind
Thank you. Mr. Puri, coming to you. Your career spans startup, institutional leadership, public policy roles. So quickly, if you can just share your experience.
I think it's so far back, so far behind that I don't remember. These gentlemen seem to remember everything they did when, 30 years ago. But what I do remember is that when we did decide to, the 3-4 of us got together and we decided that we are going to start an infrastructure company. And why did we do that? Because, that seemed to be the thing to do at the time. Just like the thing to do today is a technology startup. So we got together and we had, if I remember correctly, one motorcycle and one concrete mixer. And we decided that we will, make a pitch to get some contracts to build part of the Konkan Railway. That was the big project at the time, that big infra project and the big spend that was happening, government spend. And we started doing that and we managed to get one subcontract. We couldn't even get a direct contract at that time. And it was quite a struggle. We had very little capital. The banks were not lending easily. Lending rates were the way Mr. Lokapur just, said. And I remember, riding the Deccan Queen because there was no expressway at that time.
Yes.
And riding the Deccan Queen to Bombay. It was called Bombay then. And we used to wear a tie and you get out at VT station and all those foreign banks along the way, ANZ, Grindlay, Standard Chartered, and we would visit that and say, look, we've got this contract and there are, we are a new company and we used to be laughed out of the bank. And until, of course, we came to, one day we went to ANZ Grindlays and I think that head of credit was so amused by what we were doing that he finally agreed to take a chance on us. Yeah. And that was the start. It took us, from the time we started to the time we listed on the Bombay Stock Exchange, it took us 4 years. And we went from 0 to 500 in that time. It was a very heady experience.
Yes.
We were very young. And, when you do things like that at that time and at that age, you think that you've, done everything there is to be done and you know everything there is to know. And then it takes another 20 years to realize how little you know and how little you learned.
Yeah.
So over that period, we, I exited from there. We invested in some technology startups. Now we are in IoT. I run the Posh Group, which is a group of companies that is in logistics, manufacturing, supply chain.
Wonderful.
I think we make more than half by weight of every Bajaj vehicle, that goes through. So our share of business is that much. We make, base material for auto components.
Yes.
And that growth story has also been in the last 4 years, 5 years. We are seeing tremendous growth and a great uptick. But I was very influenced and impressed by Brajesh's speech. Sure. I think what he brought out was something that's, we need caution and we need to sort of see where we are going. And I think that's what we are now trying to do. So going forward, we'll need to be sure that this demographic dividend that we are talking about, our youth, this dividend shouldn't turn into a millstone, because one of the problems is skilling, and therefore what I do outside business is, so I'm part of the Rotary. We support the Indo-Swiss Center for Excellence and Skilling.
Yes.
We are, we are very conscious of the fact that we have a huge workforce that's qualified to do nothing and almost unemployable. And I think that's our focus now, that's our realization, and that's what we want to change.
Sure. Thank you, Mr. Puri. Mr. Hegde, back to you. Vijay spoke about the 10 trillion economy where MSMEs are at its core. So what's your advice to them to stay competitive and financially strong?
Yeah, I think, so basically MSME are the backbones of, any industry. So what I'd suggest is MSME has to be very competitive, very agile, and they have to adapt. So that is what my suggestion is, and if you become, very much comfort, or you just rely, like even the chart what has been displayed, it's also worrying actually. Like if you just, think that, no, whatever I'm doing, I'm very comfortable, it's not going to sustainable and it is not going to last. So you have to keep, that's what our mantra is, like, start with something very easy, but keep investing on advance and carry on. So don't just remain at, one level, whether it is the machineries, whether it is skill level setup, whether it is, understanding the technology or acquiring the technology, keep investing on, or keep running. Business is always about running, not stopping actually. Somebody will take over you, or you will see your own death.
Absolutely. Yeah, thank you. Mr. Puri, we were speaking about this, so I'm just, taking that forward. What structural and behavioral barriers still hinder MSME growth? We were talking about raising capital, documentation, and compliance issues that generally MSMEs face. So if you can just shed some light on that.
Well, the general impression that we have is that all the capital is chasing technology, almost all of it. And technology is the most exciting for these risk takers, and in actual fact, they take significant risk. It's almost like a double or quits in every bet they take. And we find very little capital coming to manufacturing.
Yes.
So while I'm both in technology and manufacturing, I can see a very stark difference. There is little or no excitement for manufacturing, even though we have such outstanding products and outstanding technologies within manufacturing. I think that there seems to be a general feeling in India now that unless you are in technology, everything else is like a 20-year plan.
I'll just make a point that Piyush Goyal attended the Startup India this thing, and he compared what Indian startups are doing and what Chinese startups are doing. We're making food apps and what China is actively in manufacturing. I think that's the point you're trying to make.
Absolutely. And, this is probably one of my favorite topics, so I'll take 30 seconds to talk about it. Even when it comes to technology, we don't have a significant product base. We don't have a single WhatsApp. We don't have a single Gmail. We don't have a single Microsoft Windows platform. We don't. We are great. We've fallen in love with this world called Jugaad, and we think it's great. But what Jugaad really is looking at what another country is doing and replicating that. So if we weren't to copy, and if we were not to try to replicate, and instead try to create something original, I think we would be extremely successful. But we've taken this shortcut route, and we are such a large market that anything sells. If you do it even half right, and that's my other favorite point, that we are 98% achievers. We make the best expressway in the world, but we will not mark the lanes. We will not have stop signs. We won't have safety. So this is our perception in almost everything we do. And manufacturers and industrialists like the gentleman sitting here are extremely rare.
Yeah.
Most of the time, quality is not driven by any desire to give good quality products.
Yeah.
It's driven by the customer who says, "मैं लूँगा ही नहीं अगर ठीक नहीं होगा तो."
Yeah, yeah,
You know,
yeah.
and that's what we need to change, I think.
Yeah. So coming to you, Dr. Kulkarni, how can MSMEs leverage emerging technologies to scale operations, reduce inefficiencies, improve decision making, you know, with AI coming in, all of that? What's your view?
I think first of all, the modern technologies which are coming, which are in our hand, is really the biggest privilege and the boon our MSME has.
Yeah.
Because earlier, 100 years back, if you want to be global player, you have to be big guy. Okay, you need to be multinational. Unless you do that, you really can't do much, and therefore you should be confined to local, and then you live with the local.
Yeah.
Okay? But today, with the technology coming into picture, you can create your website and be known in every corner of the world.
Yeah.
Okay. So basically, example I'll give you. In case of LK, out of these 42 countries where we actually export,
Yes.
only 17 countries I have visited. The rest of the countries, we have not even visited them ever. Not even a single employee has gone there. But
Wonderful.
we are doing business.
Yeah.
And there can't be a better example of how to use technology.
Yes.
And we are actually medium-sized company, right? We are only 300 crore company, but we are able to have a presence across the globe. And this is possible only because that we use technology. Okay. Number 2 point is that I feel that every MSME which is sitting here today, and we are conversing, should figure out how to use technology to become a multinational yourself.
Yeah.
And we are actually a global player, and we are actually do not think about MSME, we are thinking about big company. So I am hoping that after the evolution, which is the topic today, we all here who are sitting here will evolve into a large corporation in next 10 years.
Thank
If
you.
that happens,
Thank
then
you. I couldn't have related it that way. You've done a great job of it.
So if we do that, then I think we are playing and I already know one thing, this is a golden opportunity for India. There is nobody in the world today who can compete with China. The only country who can stand up today
Fantastic.
is India. And India is not only because we got a lot of people, it's because technology is behind you.
Yeah.
With technology behind you, you should be able to compete, stand up, heads on with China. We are doing our part, and I hope that you all will be able to do your part and be a global player. And if you talk to people like people from Europe, for example, some of the smaller countries in Africa, they keep saying that we have when you look at China and India, we have no chance to be competing with you guys. You guys are going to rule the roost.
Yes.
And I think this is really true, that with the combination of AI, combination of technology, and the youth which we have today, okay, we have a golden chance to be the global player and be able to compete globally with China. Thank you.
Thank you. It's motivating. You know, I think I'm standing between drinks and our panel. So I'll move on to the last question. Mr. Hegde, you know, you kind of started small, 50 plus countries. Today you export. You also gave an example of 42 countries. Just, you know, share your strategies on how MSME should look at scaling up. You know.
Yeah, basically, I think, as I said, like the primary is the quality, you know, like as if you are confident of your quality. And I think, the ones, like at least I can throw light on my industry.
Yeah.
If my quality is good, I'll have a last, problem with any competition.
Yeah.
Because I think the quality is always wins over the price actually.
Yeah.
So yes, if your product can speak, then you can always, win over most of the customers. Yeah. So basically what you're looking at like around 2 to 3% of the market.
Yeah.
So it's not that, you want to look at, to be 50% or 60% of the market. So just 2%, 3% can get you the good share in that market.
Yeah.
And you can become relevant in that market.
Absolutely.
And that gives you the comfortable visibility and voice.
Yeah. I think good point. Mr. Puri, we spoke about this also, digital e-commerce, giving market access to MSMEs. How can MSMEs effectively use these online platforms to kind of scale up business, if you can just...
So I think technology, absolutely right. Technology is the great leveler. So it gives you the same or better presence than a billion-dollar multinational, even though you're just a small company, an MSME. And leveraging that technology makes a huge difference. And I think that most of us think that technology is about getting a computer and running a computer software, but in actual fact, I think it's about bringing that into your day-to-day operations. So as long as you're using Excel and Word still, then I think you are nowhere, you're not in the technology, you're not on the technology curve. So I think that MSMEs would be, they may find it difficult to, comprehend and accept this at first, but I think that technology will actually change the way they do business, and this fear of people that technology will replace them, AI will replace them is actually not true. AI actually augments your ability.
It's only a myth.
Yes. So if you have someone who can't create a presentation for a customer or can't create a sales proposal for a customer, AI will help him do that in a jiffy, even if he doesn't speak the language. He can actually speak in Marathi and generate a Chinese, Mandarin language proposal. And that ability has never been there. This is something that, we should use to leverage our ability and our reach. The other thing that works for Indians, this has become so basic, so simple that we don't even talk about it anymore. Our payment system, so we are so used to it now. Everywhere you're using UPI, you're using a card, you're using. So the thought that you have to go to a place where this doesn't exist, or payments can't be transmitted, or I can't, if I know your mobile number, I can't send you money, is something that we find difficult to grapple with. This is how I think Americans used to feel when they visited India in the 60s and 70s, that they were overwhelmed by the fact that there were no services. And so I think that MSMEs need to quickly get on that bandwagon and not just accepting electronic payment, but understanding how technology works and how it should integrate into their regular routine operations. I think that's the important. Just the way the sabji wala is using UPI, he's using cutting-edge technology. He may not realize it, but he is. And in MSMEs, we are still maybe 3 decades behind. We are still, when in our factory, for example, when we fabricate something, we still got a welder who's actually sitting there and he's holding a visor and he's actually welding. The fact that we are big, so we have maybe 200 of them, doesn't matter. We haven't, absorbed that. I wanted to give a little example of how we are using AI. It's very simple. So one of our companies, it's a small company, it does about 120 odd crores, and we do fabrication of special equipment. So each job is different. So it's not a manufacturing process. So it has to be designed. You have a team of designers. And we generate a lot of scrap material. And our dream is that, we make money by saving that scrap because it's straightforward, direct to the bottom line. And this is our biggest challenge. So we said if only there was a way we could take each piece and have a record of what shape it was, what thickness it was, and what size it was. And when the designer was designing a complex steel building or a fabricated structure, this would be available in a library, and somebody would tell that designer, "Ye bhi hai, isko abhi use karo, yahan pe fit hota hai." And that's what we started doing with AI. So every piece, just take a picture and the AI starts cataloging it. And the moment you click, it comes up there.
Fantastic.
So these solutions are right there. And I think MSMEs would be, really, they would find it useful to start learning quickly.
Thank you, Mr. Puri. Ladies and gentlemen, I think I overshot the time. I'd have loved to, ask them more. But I'd like to thank all of you for agreeing to come on the panel and sharing your experience. Truly motivating. and at least I am going charged back. Thank you. Thank you.
Thank you.
Thank you.
Thank you, everyone. Thank you very much.
So I kindly request you all to please stay on stage. Thank you. Well, thank you for an extremely engaging session. I'd like to invite Mr. Ratul Mukhopadhyay, EVP Head Small Enterprise Group, and Mr. Sarang Dani, EVP Head West Regional Branch Banking, for the mementos. Thank you, gentlemen. We hope this has been an insightful session for all of you. A very special thanks to all our speakers for sharing their thoughts on MSMEs powering the $10 trillion economy.